Crypto in 2024. Still a thing? You bet your digital wallet it is. Alright, let's talk about cryptocurrency. Yes, you might think after all the drama, the crashes, my cousin lost his life savings on Doge Elon Musk coin that we'd all have moved on. But no, crypto in 2024 is not only still here, it's kind of having a moment. Again. The overall market cap is hovering around a staggering $2.66 trillion. That's trillion with a T. It's almost back to its peak in 2021. So, why the resurgence? Are we all just gluttons for financial punishment? Possibly, but there are actual, tangible reasons. We've seen big players, the kind of institutions that wear suits and talk about synergy, dipping their toes back in. This isn't just about tech enthusiasts in their basements anymore. This is about serious money, serious companies, and a technology that continues to evolve and find new applications. Now let's zoom in on the king of crypto, the big cheese, the digital gold Bitcoin. If crypto is a circus, Bitcoin is the main event. And 2024 has been quite the year for our volatile friend. It started the year around $44,000, but then it surged a massive 150%. By late May, it was flirting with $70,000. A huge part of this surge was the approval of Bitcoin ETFs. The US Securities and Exchange Commission finally said, okay fine, you can have these things. A spot Bitcoin ETF means it's way easier for regular investors and big institutional investors to get exposure to Bitcoin without actually having to buy and store the Bitcoin themselves. Think of it as Bitcoin with fewer headaches, and the big boys came to play. BlackRock, a company that manages more money than some small countries, is now holding $15 billion in Bitcoin assets. Fidelity isn't far behind with $9 billion. This is a signal that Bitcoin is being taken more seriously by the traditional financial world. It's made crypto more accessible, more mainstream, and, for some, slightly less terrifying. So, with Bitcoin having a party in 2024, what about 2025? Many are predicting a bull run. Yes, another one. It seems the crypto market operates in cycles like fashion trends or locust swarms. We had big ones in 2017 and 2021, periods of rapid, almost delirious growth, often followed by equally dramatic corrections. So the idea of a 2025 bull run isn't entirely out of left field. What's fueling these optimistic predictions? Several factors. Firstly, that increased institutional investment we talked about with the ETFs. That's expected to continue. More big money flowing in could certainly push prices up. Then there are technological advancements. Ethereum, the second biggest crypto, is undergoing upgrades often referred to as Ethereum 2.0, which promise better scalability and efficiency. Clearer regulatory developments are also on the wish list. Some analysts are throwing out some pretty wild price predictions for Bitcoin $77,000 by the end of 2024. Maybe even hitting $106,140 in mid-December 2024, and then soaring to $123,000 by the end of 2025. These are, of course, just guesses. The potential for a bull run is there, driven by institutional adoption and tech progress, but so is the potential for, well, the other thing. Section 4. AI and crypto, a match made in Silicon Heaven, or a robot uprising. AI and cryptocurrency are intersecting, creating a buzz. AI tokens surged in interest, growing from $2.7 billion to over $39 billion. Proponents say AI can enhance blockchain, but the space is speculative and complex. Section 5. The long arm of the law, regulators wading into the crypto pool. Regulation. Regulation can send shivers down the spine of any crypto bro or a sigh of relief for stability seekers. The regulatory landscape for crypto has been a mess. Different countries are trying to assemble the same IKEA furniture with different instructions, but things are slowly taking shape. The SEC has been particularly active. SEC Chair Gary Gensler advocates for more regulation, treating most cryptocurrencies as securities. This led to lawsuits against Coinbase and Binance in June 2023. Binance got a $4 billion fine. This regulatory pressure has tangible effects. Some crypto companies like Gemini and Coinbase are expanding to the UAE and Bermuda. Despite crackdowns, there's hope for clearer regulations. Well-defined rules could legitimize the industry, attract investment, and protect consumers. The crypto industry is like a teenager testing boundaries, with regulators as exasperated parents. Section 6. The big question. So, should you actually care about crypto trading? We've been on quite the journey, haven't we? From trillion-dollar market caps to Bitcoin ETFs, from AI tokens to the heavy hand of regulation. It's a lot. So we arrive at the big question in 2024, heading into 2025. Should you, an ordinary sensible person who probably has better things to do, actually care about crypto trading? The answer, as with most complicated things in life, is a resounding, well, it's complicated. But also, yes, probably a little bit. Not necessarily in a bet your life savings kind of way, please don't do that. But this is a significant, evolving part of the financial and technological landscape kind of way. The potential rewards are undeniably alluring. We've seen the stories, the meteoric rises, the "if only I'd bought Bitcoin in 2010" lament. And with developments like institutional adoption and technological advancements, there are arguments to be made for future growth. However, and this is a very big however, the kind that needs its own postcode, the risks are equally substantial. Market volatility is the most obvious one. Crypto prices can swing wildly, often for no discernible reason. You can lose a lot of money very quickly. So, is crypto trading worth your attention in 2024? Yes, in the sense that it's a phenomenon you should probably be aware of.